Started, guys, and we can. I'm going to go ahead and get started. Hopefully she will be joining us. Have any of you noticed if Rosemary is on yet?
Don't see it yet.
Well, good morning, everyone. I'd like to welcome you to our Bank on Your Success, Banking and Budgeting Basics webinar. And I really, truly want to say thank you to our community partners who've been really helpful in helping us to publicize this event. I just noticed, and as some of you were sharing where you're logging on from, that I see Tanzania on there, Vincent.
Yes, I did. You did.
I thought, oh my, I wasn't expecting that. Did see there were a number of states that are represented from California across to the East Coast. But at any rate, I'd like to say thank you to our sponsors, our co-sponsors, Aiken County branch of the NAACP, Umoja Village, which is a community service organization, as well as Shout 94.7 Radio, and not to mention TRUIST Bank. So again, thank you all. And again, I just mentioned our sponsors that we have, and I hope that our chapter president is on now. She was having a few problems getting in, logging into the webinar. For some reason, it was asking her to re-register, and she was one of our first to register. So again, I want to introduce our chapter president, who is Ms. Rosemary English. And I also want to introduce Ms. Donna Wesby, who is the general manager of WAAW Shout 94.7 FM Radio. She's the co-founder and CEO of the Umoja Village, the community service organization that I just mentioned. And she's also the host of a local television program that we have, Education Matters, here in our local stations. And speaking on behalf of Eugene White, is Ms. Malencia, our Dr. Malencia Johnson, who just happens to be his wife as well, with the Aiken County branch of the NAACP. So do any of you know if Rosemary is on yet?
She has not logged on yet.
Okay, well, Ms. Wesby, I'll ask if you will go ahead, if you don't mind, and bring greetings from your different organizations.
Good morning to the Aiken Links and all of the other organizations, to Mr. Cain of TRUIST Bank. Thank you so much for this opportunity to help spread the word about this very needed workshop. When it comes to banking and finance and money management, we can't talk about this topic enough, which is why WAAW and Umoja Village we're very enthusiastic about helping to spread the word. When it comes to marriages, finances is one of the top issues that can break up marriages. When it comes to managing finances, college students, before you even get started with your lives and careers, if you're not careful, you will develop or start credit card debt. So this workshop is extremely important, and I pray that you take the knowledge that will be delivered here today and apply it to your lives. And we're just grateful for the opportunity. Thank you.
Thank you, Ms. Wesby. All right, Malencia, would you like to? Malencia is also our chapter vice president.
Good morning, all. I'll go ahead and pull double duty this morning since our president isn't able to log in at the moment. My name is Dr. Malencia Johnson. I'm the vice president of the Aiken chapter of the Links Incorporated and an executive committee member of the Aiken County branch of the NAACP. And thank you all for being on this morning. And thank you so much for wanting to learn how to bank on your success. Again, this is a very important webinar, and I'm excited that we were able to bring it back to Aiken.
All right, well, thank you very much. Thank you to both of you. And if you all will let me know when Ms. English is able to get on. I want to recognize our college and university students and staff members that registered and are participating in the webinar this morning. Vincent, Mr. Cain, I mentioned to you that we have, I believe, 11 different colleges and universities, starting with Aiken Technical College here in Aiken, South Carolina, Benedict College, Florida State University, Georgia Southern University, Gwinnett Technical College, North Carolina State University, the University of Alabama, the University of South Carolina at Aiken, the University of South Carolina and Columbia, at the University of Kentucky, and Walden University. So I was just really excited when I looked at the registrations and saw the number of different colleges and universities that were represented and registered to participate. So again, thank you all so much. And as Ms. Wesby said, I think that really thinking about banking and budgeting, especially starting in college, with you getting all those multiples invites to open a credit account, have a charge card, and so on. So, and then once you graduate and you're out there in the world working, I think all of these tips that you'll hear today will be helpful for you. All right, so I'd like to go on to introduce our speaker, who is none other than Mr. Vincent H. Cain. Mr. Cain was with us last fall, as a matter of fact, a year ago this month, with budgeting during a crisis. And so he agreed to come back on and give us more or less part 2 of that, entitled Bank on Your Success, Banking and Budgeting Basics. These are special edition webinars. He brings a wealth of experience as a regional multicultural banking leader for Georgia and South Carolina with the TRUIST Bank out of Atlanta, Georgia. He has also served as a vice president and community business development officer, a marketing leader, and a regional bank manager. He is a graduate of Morehouse College in Atlanta with a Bachelor of Business Administration or in Business Administration. So again, Mr. Cain, we want to thank you for serving as our banking financial advisor and presenter today. Just as a reminder to our participants, our presenter is sharing information on financial planning and budgeting solutions as a community service. It is not an endorsement of any particular financial planning service, company, or bank. You may want to have a notepad to take notes for your future reference. This is an interactive session, so you can place questions in the chat box. And in the event that there's not enough time for your questions to be addressed, we're going to ask that you follow up with our presenter, or you may follow up with me. You have my email address, or you have the Aiken Links email address. So if you will follow up as you deem appropriate using the contact information that you've been provided. And once again, today's session is being recorded, and hopefully we will be able to share that. I know that Mr. Cain will be able to share your presentation, the PowerPoint notes as well, I think. And so having said that, let's talk about today's webinar topic, and that is Bank on Your Success, Banking and Budgeting Basics. It's my pleasure to introduce Mr. Vincent Cain.
All right, well, thank you, Link Gloria. And I tell you that intro is, I'm glad this is recorded because I'm going to need to use that intro again. But I appreciate this nugget of you all's time on this Saturday morning before the Thanksgiving holiday. I was just telling Miss Gloria that when I was in college, come this Saturday, I was gone, you know, but you all have paused to you know, still feed into the knowledge and the information that can be shared. And that's what we plan to do here today. I think we've got a little, I don't know if it's me or if there's other feedback out there. Okay, it looks like it got fixed. But thank you once again. Bank on Your Success is our financial knowledge tool that we utilize to just share the conversations that happen internally in the branches with our communities. And myself, I'm a multicultural banking leader representing Georgia and South Carolina. And you say, you know, what does that mean? Well, I work with all of our internal partners, external partners to share knowledge. And you all highlighted it, you know, perfectly. When I was in college, I didn't have the opportunity to sit down with a banker. And so I learned the hard way who NSF was and who, you know, the credit companies were. I was calling my mother saying, who is this on my bank statement? Who is this NSF person on my bank statement taking my money? Well, I didn't have any money, so I didn't think to go and sit down in a bank. And so the more that we're able to share this information and share this dialogue is, you know, hopefully a way to inspire you to move in a direction and learn from what we're talking about today. Now, I got a couple of special guests on. I'm going to highlight them. You know, they may not be on camera or anything like that, but I'm very grateful for them to be on. I got Miss Stephanie Johnson. She is our community development manager for South Georgia, and she does a lot of this exact same type of outreach and impact. And she is a very close teammate of mine. We've done a lot of sessions together, and I just wanted to you know, make mention of her being on. I'm grateful that she was on. She found out like last night and jumped on this morning. And then I also have to recognize my own sister. She didn't want me to say anything about it. Melanie Gallo. She is coming from the Magnolia chapter of the Links in South Atlanta. And she is on this morning as well. Don't have to say anything, Melanie, but you know, I was going to give you a highlight because again, I think it was 9:30 and I said, here's the link. Here's how you register. And she jumped on it, but it's just the want for this information and the community coming together. You all out there right now, I feel like this is family. This is Saturday morning. The sun is out. We've got Thanksgiving right around the corner. And I feel like I'm talking to my family. So thank you all once again. And without further ado, TRUIST, our purpose is to inspire and build better lives and communities. And one way that we do that is through the sharing of financial knowledge. And hopefully you're able to, you know, we just want the light bulb to go off. That's what it's all about. Doesn't matter where you are, how old you are, how young you are, you know, the experiences that you've had. My young lady that's joining from Tanzania right now, I'm blessed to have you. She's on vacation, y'all. And that's what I'm talking about. That is dedication. And you made a comment around the business piece. Well, everything you see today, there's another version that's around business. And Miss Gloria, I think that might be our next segment that we do. So we'll keep talking about that. But it's it's about sharing the knowledge. Absolutely. And thank you, Link Gloria, for reaching out to say, hey, what do you have? What can we do? And we were able to make this happen. And this is something that I do. This is my, you know, my role with the bank to do more of these. So if you are a part of an organization, if you know of an organization that can benefit from the information that you're about to see, please reach out to me. And whether it's virtual, we're doing a little more in person, but this is what it's all about, sharing knowledge.
Well, thank you. And we appreciate your efforts to be here today because you are a busy person. I want everyone to know that.
No, I appreciate it. I'm busy in that I hear my boys upstairs eat me out of house and home. I told my son, I was like, okay, you making eggs this morning? Okay, put some in a little dish for me, put some cheese on it and put it in the oven. So that's what I have to look forward to in about an hour and a half. But no, thank you all once again. But to the content, you know, banking and budgeting basics. This is what we're going to go through today. We're going to determine your financial situation. This is your financial situation. So as we go through these things, think about it for yourself. We're going to talk about the basics of banking, questions to ask if you have a bank account already, or if you're looking to establish a bank account. These are questions that you ask the person that you're sitting in front. They're going to ask you a lot of questions, of course, but these are things to keep in mind while you're shopping around for that right bank account. but it's more so relationship. It's all about the relationship. And that's what we want you to remember today. Assess and your budget and your savings plan. You want to save something. There's no set amount as far as how much that should be, but you got to start somewhere and then build and repair your credit. And hopefully I'm gonna kind of move through it because I know that credit piece is one, it's the $1 million question. But there's some tips out there that I'm gonna pose such that we can all think a little differently in regards to that. And these are tips that I learned from my 10-year-old son. So stay tuned for that. I work at the bank and I'm learning from my 10-year-old. All right, so first, determining your financial situation. What do you spend your money on? Now, for those of you that were able to join us last year with budgeting during a crisis, it was focused all around what's leaving your pockets and what's coming into your pockets. I think before I said households, but when we're not in the house, that's coming out the pocket. That's coming out the wallet. So what do you spend your money on? We're getting out a lot more. We're spending a little differently. We're spending more. And we're getting back comfortable to kind of the habits and the ways that we used to do beforehand. And then how much money do you earn each month? What's coming into your pockets? That's something that you've got to pause and kind of do an inventory as far as what's coming in. How much disposable income do you have? That doesn't mean money you can dispose of and throw away. That's money that can be utilized for savings, money that can be utilized for what my dad used to call hiccup money. You know, we're driving a lot more. When you start hearing them brakes squeak, when you start hearing or seeing a light pop up on your, on the dashboard, you're like, oh Lord, it's time to get something fixed. And when they want to fix it, they want to fix it. What are your financial priorities? What are your priorities? Saving? Is it school? Post school? Is it family? And then goal setting. So first, we're gonna determine that this morning. So where does my money go? And think of these 3 different scenarios and think where you fall within these scenarios. I know where I spend my money. I look at my checking account every day to see what my balance is, but sometimes I'm not aware when a check or debit transaction clears. I'm not that great at it. Or I figure what I don't know won't hurt me. I used to track my spending and I was stressed out all the time. So now I just don't worry about it. Or I balance my accounts to the penny. It takes a few minutes a day to download and categorize my transactions. That way I know where I stand every morning before I leave to work. Now, I am transparent. I'll fall between the first and the third. It's great to be able to balance it. And once you have to make a habit out of that. But then I get comfortable and I'm at the first and I may check a balance. And I may not realize, a check that's coming through. And I work at the bank. You think it's a little different, but this is all of us, y'all. And as far as what you don't know won't hurt you, you definitely want to know what's happening, unless you're saving it, because there's ways of saving to where out of sight, out of mind, and we'll talk about that in just a moment. So this right here is tracking your expenses. And we went through this previously in terms of the budgeting during a crisis. So hopefully you've been able to, I believe I shared an Excel spreadsheet last time that allows you to kind of put those numbers in. If you haven't tried it since then, it might be a time to just check it out and see where you are. But this is everything that's leaving your household. This is everything that's leaving your pockets right now. Daycare, children's allowance, and I'm learning firsthand about that. They want to go vacuum some floors and then get an allowance for it. I'm like, it needs to be done anyway. Long story. Child support, clothing and shoes, laundry, dry cleaning. We're getting out more. And so that laundry and dry cleaning is something that we're having to keep in mind. Donations, entertainment, this is all personal and family. Now, food is a big one. groceries, household supplies, meals out. That's the thing. When we're back in the office, when we're back out on the streets making an impact, well, it's very easy to also make a quick stop and get that McDonald's and get the Wendy's and get the fast food, which I know I don't need, but we're spending more money out. And that's where money is leaving our pockets. Any debt payments that you have out there, auto loan, we still got cars, credit cards, any credit cards you have out there. And we're going to talk about ways to, work on any cards that you want to pay off a little sooner rather than later. And so we'll get into that a little bit later. Department store credit card. I never had a department store credit card because I just don't shop like that. But I know if you got them, any perks that they have, there's still money owed. There's still money owed. Student loan, that's a big thing. We got some students on the line. Thank you to all of my students that are joining this morning, because like what I said, Thanksgiving is next week. I would have been gone, headed back home, probably still in the bed about this time on a Saturday. But you all are on to hear this information. That is dedication. That is absolute dedication. And it warms my heart for y'all to be on just to hear this information. Any personal loans you may have, and then the household. For those of you who, you have household, you may have kids, you've got rent, mortgage, any secondary mortgages that you may have, insurance, homeowners association dues, gas, electric, water. This is everything that's leaving your household, cable, internet. And I talk about cable and internet because it's easy for us to have 4 or 5 cable boxes throughout the house. But what happens when you call the cable company and say, you know what, I don't need all these cable boxes, I just need one, and get a bunch of Rokus and Fire Sticks and streaming sticks and so forth? You're saving that annual amount or that monthly fee each month. So these are ways that's all that's leaving your home. So until you pause and let the light bulb go off and take an inventory of what's leaving your pockets, this is why we go through this exercise. So determining your disposable income. You got your total net income, that's everything that's coming in, minus your expenses. And what's left over is what you can use to save, what you can use for hiccup money. And that's until you go through that exercise, you want to know what it is exactly that you have left over. If you don't have anything left over, that's fine too. Then you put more focus on what's leaving your pockets such that you can reallocate, redistribute, and do things a little bit differently such that you can have some left over. That's the point. So what are your financial priorities? What matters most to you? Knowing these priorities, it helps you create financial successful goals that are aligned to the vision of your future. So I'm going to throw this out there. And Miss Mary, I hope you're still there because I'm going to pose this for responses in the chat. But if you were to receive $100,000, what would you do? What would you do? And you can just put it in the chat box. I can't see the chat. So Miss Mary or Miss Gloria, any responses that come up, if you received $100,000, what's the first thing that you would do?
One response is pay my debt off.
Thumbs up right there. Thumbs up right there. I didn't want to lead with that.
Pay off my house.
Ooh, that's a nice one right there.
Pay off business. Pay off business debt.
Pay
Invest.
bills. Invest, yes.
Right.
Wow. Absolutely.
Pay off credit cards. Pay bills. Invest it. Pay debt and save. One person says, save at least 50%, put toward my mortgage. I have no other debt.
Whew. Nice.
Wow. Wow. Y'all gave the textbook answers, and that's a good thing. That is amazing.
College fund for the kiddos.
Yes, yes. I mean, you've taken. I don't say anything else about it, because the next thing I was going to say was exactly that. Saving, paying off debt. Nobody put in there, I'm about to get this new Range Rover.
Well, almost. It says I'm buying a new car.
Okay. And there's nothing wrong with that. There's nothing wrong with that. But, we just have to prioritize, because, if you get that, but there's still some other things that need to be paid for. You want to work with your own money when it comes to the things that you do. So yeah, I mean, if I were to receive $100,000, I'm thinking of folks that I owe already, credit that's owed already. I love to pay my house off, because I tell you, not having a mortgage payment, you get a lot more. Yeah, that's nice. That's nice. We may put something towards it, but I'm not going to create another expense from those funds that I receive. What can you cut from your daily expenses? What are your financial priorities?
Here's another. I'm sorry. Yes. Here's a response to pay off debt and invest in a ETF to create a new income.
Ooh, wow. Y'all got some innovative ideas, and just, I'm telling you, this is why we go through this. Because if we weren't on here right now, I mean, you may have thought about it already, but that's the point. Think about these things and hopefully propel you to move forward with some of those things, with what we're able to utilize. Great responses, y'all. Great responses. Ms. Gloria, I can do this again next Saturday. I can do it every Saturday. I appreciate y'all. You got a great audience. I saw that out.
Absolutely. We'll just invite them all back.
Okay.
And we'll eat turkey while we're on.
Yes.
Vincent, I don't know if you intended to share your presentation while you're online. Were you going to flip through your screen? It is not showing. We see you.
Wow, I did all that. And y'all just been looking at me the whole time.
Well, I hadn't even thought about it until Mary said, I think he thinks he's sharing his presentation.
Oh my gosh. See, that's, well, okay. Y'all see now.
Sorry.
You good? It is all right. All right, here we go. How was that for everybody?
It's good.
Okay. Gotcha. I didn't have any big pictures or anything going on. Basically what I talked about was what you would have seen, but this is very timely. We are at the piece as far as goals, SMART goals. And there we go. When you're setting goals, you want to be specific, measurable, attainable, relevant, and time bound. Think about your own goals. You want some short-term and long-term financial goals. Short-term goals are set in the next 6 to 12 months. So think about the next 6 to 12 months. What is a plan that you may have? What's something that you may want to pay off? Where do you want to be during that time frame? Long-term goals are more than a year from now, but less than 10 years. So we break it down even more. Where do you see yourself in 1 year? Long-term goal, number 1 would be 1 year. Long-term goal number 2, that's 5 years. That can be after you've paid something off, how much you want to save, what you want to do. And then long-term goal number 3, 10 years. If you're in school, where do you want to be 10 years from now? And that time will fly by. Break it down, long-term and short-term, so you know what steps that you need to take. And this goes a lot of different ways as far as understanding And until you have a goal in place, you know, you have to have that goal in place to be able to put the plan in place to get there. Now, banking basics. Now, this is probably a lot of information that we know already, that we're familiar with, but just in case, it's still good to go through this and hear it, because there's questions that you may not have asked before that you can go and ask. Or if you look to do something different, these are things that you could ask. So a checking account, of course, is what we talk about. It's one of the best ways to control your spending. Now, when I was in college, we didn't have all the banking apps and the online banking. So I was able to just jump on my phone and see what's coming out. We had online, but it wasn't on my phone. And so a checking account is a great way because it's safer than cash, of course. Checks and debit cards, they provide you proof you paid someone, and you can deposit and cash checks for free. And you can use that to make payments, check your balance and transfer funds, and also get a digital record of the spending that you're doing. That's the key. It's a digital record. We're getting away from the paper. So this is a digital record that you can maintain and keep an eye on. But you wonder which checking account is the right checking account. You know, when you go, whether you're with TRUIST, whether you're with another financial institution, these are questions that you want to ask or look for them to tell you about when you go and sit down with them. Interest on those balances, service fees. You know, a lot of times there's a monthly service fee, but it gets waived if you have a direct deposit coming in from your employer, or if you're a student. You know, a lot of banks have accounts that are free because you're a student, and they just want to know when you plan to graduate. Branch locations, you always want to be able to go and sit down with somebody. Overdraft options, we're going to dive into that in just a moment. The money's not there and you spend it, does it need to be paid or does it not need to be paid? Free online banking with bill pay service, you know, electronic. It's all about accessibility. Email alerts, mobile banking, mobile deposits. The thing about mobile deposits, how many of y'all have written a check within the last month? Like a hard check? Because they're getting pretty obsolete, but they're still around. And, you know, my wife and I, if we're making a transfer, you know, I'm with other banks as well. And it's easy to write a check to make a transfer to go to the other bank as opposed to having to go and stand in the line and go through that whole process. So mobile deposits are something that you want to make sure that your institution allows for you. ATM surcharge fees. If you go to an ATM that doesn't have your bank name on it, how much are they going to charge you? Or do you have an account that allows you to have free ATM transactions? Debit cards, rewards program. We're all looking for rewards right now. And does your debit card allow that? The credit cards have been doing it for a long time, but does your debit card allow you rewards? Because that comes in handy. We're still spending. We're constantly spending. And then unlimited check writing, any costs for that, if they have any. These are just things you want to keep in mind when you're opening an account, or look at the account that you have currently. Are these things, do you know about all of these? Do you know all of the answers to these for your own account? That's when you can take that pause and ask these questions. Now, parts of a check. This is something that, like, you're probably thinking, why are we looking at this? Well, we're all human. I'm human. And it's good to just have a refresh on this. If any of you have sent a wire transfer, then the first thing you do is like, well, what's my bank's routing number? Well, what I know my account number. What's at the bottom of the check right there? The left-hand side, that's the bank's routing number. That tells the other bank and the Federal Reserve where your bank is located. And then that number next to it on the right, that's your checking account number. That's what lets the other bank and the Federal Reserve know that that's where your funds are located. But one of the biggest things I want everyone to think about in terms of writing a check, is just like what we said, they're pretty much obsolete. But if you need to write one, and if you're in a rush, we can make a mistake and it'd be costly. You got your date, that's fine. You got your signature, that's fine. Your address, even if it's an old address on there, it doesn't stop the check from going through. But the key to remember is, you see that $, when you write that number there, that's the amount that's in your mind that you want to leave your account. But what to keep in mind is, you got paid in order of, that's who it's going to, of course, we do that. But that second line, that's the numerical, written out portion of that number. Whatever that says is what's coming out. So if you put 2,500 on the $, and then you rush in and you write 25 and 0 over 100 on the written out part, guess what's coming out your account? $25. That's the legal amount that has to be honored when a check comes through the system. So when you write a check, pause, make sure you're writing that amount out correctly, because if you want to pay somebody, I did this myself. I wrote 2,500 and I wrote 25 over 0 over 100 and drew a line all the way to the dollars. I was rushing. When I saw that money still sitting in the account, I said, what's going on here? Well, that's what they have to honor. And that, and I think until it happens, we may not think about that. So that's why I bring that up when we have this page to come up in terms of, our presentation. Overdraft protection happens when you spend more money than you have available in your account. When you deposit it, you got to wait until the amount posts to your account before you can spend it or pay any bills. The bank doesn't know exactly what is in the other bank's account. You make a deposit, that bank goes to the Federal Reserve. The Federal Reserve goes to the other bank. The other bank will say, yes, the money's here, and then they'll send the money accordingly. Generally takes about 3 days for that to happen. Now, banks will give you a credit. They give you next day credit. That's really like a courtesy. But you want to make sure that it is, everything is good, and still maybe wait another day, whether it's a random check that you're depositing, because say the money was not there. Say somebody sent you a check and that money was not there. Well, there's a chance that they can pull those funds back out if it's not there, but that's dependent upon the bank. Overdraft protection is where you have another account such that if the funds are not there, they'll transfer from your own savings account. So when you swipe your debit card, if the funds aren't there right away, they'll pull from your savings account, another checking account, such that you're only paying maybe a $5 or $8 fee for that transfer to happen, but you're not getting dinged with an overdraft, which is $36, $38. That's an expensive pack of gum right there, y'all. And that's why setting up overdraft protection is something that you can do on your own. Before we get to this next point, overdraft coverage is when the bank knows you and they may charge they'll charge a fee for each item that comes through, but they know that this is not your normal activity. And say it's your mortgage coming out or your rent coming out, that $1,500. The bank, if you elect to do this, you can tell the bank, if my funds are not there, you can overdraft my account and I will pay the extra fee. It's kind of like a mini loan, but you just don't want to depend on that and that be a regular occurrence, because say they do a fee for every single item that's coming through. And so you have to keep that in mind when you are making your charges and your purchases and so forth. If you tell them, yes, if it's not there, go on and pay it, or you can say, hey, if it's not there, decline it. So they can bounce everything that you want to be bounced. And it's just up to you. I'd rather be embarrassed in the grocery store and my card didn't go through, but you know what? It's saving me $38. And I was just trying to buy some carrots and some squash for my pet turtles. But hey, that's just something that you have to keep in mind. Now, if you have overdraft protection, it'll kick in first. If you have overdraft coverage comes in behind that. Overdraft fees and options. This is a document that'll be provided to you when you open an account, or you can just go to your bank and sit down with your banker and say, they call it a fee schedule. When you open an account, they give you a bunch of paperwork that has a bunch of stuff in it. A fee schedule is what breaks down all of these different types of fees for you. And they tell you what's going to get charged, what doesn't get charged, ways that you can waive it and not have these charges to happen. Check cashing, prepaid debit cards, depositing. So when you take your paycheck and you go to a check cashing store and they cash it for you, you may think, okay, yeah, this works, but they're taking a portion of your hard-earned money. And so that's why having a bank is beneficial, because you can deposit your funds, or if you have direct deposit, a lot of times if you get paid on the 15th, they pay you on the 14th. If you got direct deposit, helps the bank out. You know, you're saving paper and they credit you earlier, helps the business out as well. But a check cashing store, they're not giving you any advice. They're not helping you save. They're not lending you any money. They're just giving you a check. And the thing is, they take a portion of that, your hard-earned money, usually 3 to 5%. They'll give away your money. If you have a bank, you can deposit it, you have direct deposit, and keep your money. Truist checking accounts, they make it easy to deposit a check, personal checking account or savings account. We now have a Truist One account. I had to throw this plug out there. Truist One account that's got several different levels. No overdraft fees, y'all. No overdraft fees. They did some analysis. They did some research. We all hate overdrafts. So they created an account that doesn't have overdrafts. They give you a buffer, and they let you know how the buffer works. And that's amazing. Absolutely amazing. So I know we've got folks on from a lot of different areas and markets. Reach out to me. And if you have additional questions, I can make an appointment for you to have a sit down with someone. You definitely want to sit down. Allow deposits in person through the ATM, on your phone, or through the mobile app. It's about the sit down. And we talk about this from time to time as far as making payments. And I think that's on the next, not this one, but when we talk about payments, there's Zelle, there's Venmo, there's Cash App. What's the biggest difference with all the payments that we're making? If we need to pay somebody, well, Zelle, you have to log into your bank account to be able to send a Zelle. If something goes bad, you go to your bank and you talk to somebody. Cash App, Venmo, I mean, I've used them myself, but if something goes bad, what you doing? You're calling an 800. The benefit of being with the bank is the fact that you can always sit down with somebody to ask questions. If they don't have the answer, they're going to call and find the answer for you. Something about that's not going away. And that's why we talk about that. Now, FDIC, what you need to know in terms of the FDIC, if a bank were to fail and your money is there, well, they're going to cover your funds for you. It's insurance. And so mutual funds, money market funds, annuities, treasuries, stocks, bonds, those are what are not covered. So think about what is tangibly yours. You go to a bank, you put it in an account, that's yours. Checkings, savings, money market, CDs, IRAs, individual retirement accounts, they're covered by the FDIC because that's your money. If they fail, it's not your fault. And they insured up to $250,000, And there's ways of increasing that as well based upon the titling that you have. You know, if you have someone else on the account with you, if you've got payable on death, there's ways to kind of change that and increase that. And that's a conversation that has been happening for a long time. But when you go into your financial institution, this is what you're gonna see FDIC, and they're gonna let you know what the coverage looks like and how much is covered. And then you can ask questions. What does this mean? So what do I need to do? How do I need to structure my account? It's all about asking those questions, because they're gonna have that for you. All right. So a couple of questions for you. In terms of FDIC, Mary has a checking account with a $1,000 balance. Savings account with $20,000 balance. Is her money insured by the FDIC? Well, checking account, savings account, yes. John has an IRA with $150,000 and $200 in combined deposit balances. Are his funds insured by the FDIC? IRA, yes, still covered. $200 in combined deposit balances, that's below the $250. Now, if he had $150,000 and then another $200,000, would all that have been covered? Just 250 of it. Just 250 of it. So that's why it matters how you title the accounts that you have.
And we have a question, Vincent. They're asking, is that per account or per person?
Great question. It's per person, because when you have a joint account, then it increases the amount of coverage that you have, because they look at that and they see two individuals. Or if you have a payable on death account, and this is what I'll let the bankers in the branch, they can break it down further for you. But when you have a payable on death, then it's an opportunity for you to have your amount, and then whoever you have listed as a payable on death can increase that amount as well. So talk to your banker. That's why we go through this exercise, such that you can ask that question and ask your banker. Hopefully you have a banker. If you don't have a banker, call me, and I'll put you in touch with one locally where you are. But it's asking these questions such that we can make sure that we are all protected and prepared. All right. Great question. I appreciate that. All right. Budgeting and saving strategies. Now I'm going to move through this because the credit piece is one that I really like to focus on. It's always top of mind. But as we continue to move through, if additional questions come after the presentation, reach out to myself, reach out to Lynn Gloria, and we can continue this conversation, one-on-one. And again, the young lady in Tanzania, I only on vacation. So grateful. The business piece, we have this exact same thing for business finance basics. And I love to talk to you about that. So we'll talk. But budgeting and saving strategies. So three main.
Excuse me, Vincent, you may answer this question. Here was a question that was sent through email in regards to the registration form. And it asked, the person said, I'm interested in protecting my assets to help my children in case something happens to me, maybe setting up a trust. If this is the best idea, can you point me in the right direction or give me advice? And I'm not sure if this would come under what you're about to talk about.
Pointing in the right direction is exactly that. Because what I do is, if you send me like maybe the email of where that question came from, then I can connect that individual with a trust advisor or an advisor that does that on a daily basis. What I'm talking about is it's kind of high level for all of us, but it pertains to all of us. But when we dig in a little deeper, then I'm also the one to point you and connect you with the right individual within the bank.
Sounds good. Okay.
Yep.
Thank you.
Great question. So 3 main budgeting strategies. There's controlling your spending, managing your debt, and then saving for the future. Your budget is a map. So your buying and savings habits are the directions. If you pay attention to your directions, you'll get where you're going. Strategy number one, make your budget real and reasonable. Now, we talked a lot about this with budgeting during a crisis because our lives were changed greatly during the crisis. Crisis is still going on. Pandemic. It may not be so much of a COVID pandemic. It's still out there. The flu is out there right now, and that's what I'm more worried about. But then you also have your own personal financial pandemic that looks different for each and every one of us, that we're always working to alter and adjust. So when you make a budget, first, the fact that you have a budget, that's the start. Because if you don't have a budget established, how do you know what's coming in? How do you know what's going out? Cutting costs is usually the easiest way to increase your disposable income. I didn't go eat out yesterday. I ate a salad at the house. So instead, I didn't spend that extra money, and that helps to keep money in the account as opposed to eating out all the time. Eating out is like one of the biggest things as far as where our money is going. It's a convenience. You can also consider ways to make more money if you're skilled at something. If there's something that you can do, you can help out your neighbors. I got a neighbor 2 houses down. He's very skilled at electrical work. So I needed a couple of outlets put in, in my basement. He came and hooked me up. Well, I like to cook. So what I do, I hooked him up with a couple of racks of ribs, and we just kind of worked together in that regard, as opposed to calling the electrician. Now he knows he's by code. It wasn't bad or anything like that. But there's just ways that we can help out and make more money. Now that was more of like bartering, what I talked about before. But my son, and I talk about him all the time, he's got his own business called the Handy Kid. He's rolling out trash cans. He's watering plants when people go out of town, watching pets when they go out of town. He's got a busy week next week. He was telling me about it. Of course, that means I'm gonna have a busy week because I got to take him everywhere. But at the same time, he realizes he's making a little money from the things that he's doing, rolling out some trash cans. And I mean, that's a big thing, especially when it's cold and the trash cans are full. That's something to keep in mind. But think about your own kids, or if you just want to help out some of your neighbors, a few extra dollars, you never know. Periodic checkups, they help make sure that you're getting the best deal, and they're a great way to cut costs, like insurance, cable, cell phone, internet. I talked about that. Getting rid of those cable boxes. You just need one, keep the service, and then get some streaming devices and so forth. You can cut a lot from your monthly plan. Strategy number 2 is create a budget so that you can set aside funds to pay down your debt. Reducing this debt can increase your credit score. We'll talk about that in just a moment. And it's an important part of your financial life. Pay yourself, 10% of your monthly income to pay down this debt. And if you can't pay more than the minimum to speed up the progress. So we're going to talk about a strategy of how you can do that with debt that you have out there. If you've got some credit cards out there right now, they call it the snowball effect. And you may have heard about it before, but we bring it up because it's meaningful. Saving for your future. Your paycheck, 10% of that, put in an emergency savings fund. Hiccup money. I can't say it enough. Because you never know when that light comes on in the car, or if there's a need in your home, your household. You want to save such that when that time comes, you're not scrounging to figure out, okay, how am I going to do this? How am I going to acquire this? I just bought a bagger for my lawnmower so I can clean all these leaves and these pine straw up. Well, that bagger was pretty pricey. It wasn't in my plan, but I was able to take care of it because I had been saving to put it towards the house anyway. And then set aside money for a new home, car, or other big purchase. You know, there's nothing like making that purchase and you don't owe anybody. That's yours. That's your property. And then there you go, the college fund for your children. You can start with your banker. And then also if you've got a CPA, they also really give you great advice in terms of college funds, ways to set them up, what to set up appropriately, and moving forward from there. How much can you save? Just start with something. You see the chart up here. If you're $10, after a year, you're $120. And then after 5 years, you're $600. But just start with something. You know, if you do $20 every month, how much will you have after 1 year? Well, $240. That's something, y'all. That's hiccup. That's a good car hiccup right there. Because when the car hiccups, it's generally 200 and above anyway. And then after 5 years, 1,200. But saving during this time, or if you do $50 a month, but not even that amount, just doing something, starting with something. That's what it's all about. Because if you're not saving anything at all, a hiccup comes along, and then you're finding, you know, trying to figure out how to cover those. And then interest. You know, there's different types of interest. There's simple interest and compound interest. You start with $100. Annual interest earned is $1. This is what the banker will tell you when you open the account, usually on a savings account. Total interest earned is $1. And then at the end of the year, you at $101 now. Next year, you start over. $100 again, $1 interest earned, $2 interest earned, because they're looking at, okay, you got $1 last year, so now you're going to get another $1, and that's $2. And your total value is $102. Compound interest is when you start with 100, you get $1, you're at 101 at the end of the year. When you start over in that second year, you're starting at 101. You get another $1. Now you're at 101 and a penny, because they're looking at how much is in the actual account, and you're at 102.01. These are questions to ask your banker when you're wanting to establish a savings account and you're thinking about saving. Now, interest rates aren't the greatest right now, but just understanding the difference between simple and compound interest is something that you want to keep in mind. So strategies to be successful as far as saving and setting goals: pay yourself first, just like your rent or your electricity bill. Set up automatic deposit into a savings account. What you don't see, you won't spend. I do that with my online banking. I have a deposit that goes in when I get paid. If I don't see it, I'm not tempted to make a transfer from it. And that's what helps me to save, because I'm guilty of, okay, it's there, I'm going to transfer it, and I'm going to buy this item that I probably don't need. But start as early as you can. You know, especially if you have a long-term savings goal, start as early as you can. You know, as long as you start early, you get in the habit of saving, and then you can increase that as you've made some different choices and decisions along the way. Saving goals and planning. What do you want to achieve? What are your financial goals? How much will you need for your goals? So I'll pause and because I get to talking. We can throw this in the chat box. What do you want to achieve as far as financial goals? What are some thoughts that you have as we talk about this? What are some things that come to mind? And you can post it in the chat box.
There was a question in the chat box, Vincent. The person asked, is it recommended to use marginal to invest?
See, that is something that I would let one of my investment folks to talk about.
Okay.
Who look at both sides as far as what to use, what not to use. And marginal, I'm thinking of maybe using some of your disposable income and so forth. But I leave that to my investment folks, and you can reach out to me because I have someone that I'm close with that you can have a sit down and get all the answers to those questions.
Yeah, let me ask Mr. Morris, Daniel Morris, you want to clarify your question that you were asking?
Yes. Basically what I was referring to, there are certain investments where they will match funds that you invest. If I had $100,000, they would match $100,000 for you to invest as well to increase your investment. And there's a very small percentage on interest that you have to pay on that margin. And I was just wondering, is that something recommended, or do you just need to stick with your personal investment money?
That is a great question, Mr. Morris. And I would absolutely have you to sit down with my investment teammate, because as I don't see the investments on a daily basis, that's something I want to learn more about. And but no, I totally understand. So you can provide your email to Link Gloria or send it to me, and I'll let you have a conversation with my close teammate that works with investments regularly, and they can say yay or nay and give you some other advice and options at the same time. Great question.
Here's a goal that was entered: financial freedom, no debt, nice emergency savings, and plenty of disposable income.
Yes. I took a deep breath when you read that, because I think we can all take a deep breath, and that's the feeling that we get when we have our financial freedom. See, and the thing about we've got our financial health, we've got our mental health, and our physical health, and they all are kind of rolling at the same, in the same stance right now. And this type of presentation is of course geared towards your financial health, but just also think about yourself and where you are, and just your health in general, because we've got a lot of things happening all around us that we have to pay attention to. And so no, I appreciate that. That's spot on. Still, nobody said go and buy a new. Well, there was one new car, but that's different. Depending on your scenario, that's all right.
Yeah. All right. We have one other comment. It says, it's not a question, but a good point to address. And that is, when it comes to controlling spending, people should be truthful to oneself and evaluate a need versus want.
Oof. That's a whole presentation right there. Needs versus wants. Whether you're on the last one, but needs versus wants. We have our needs can be what is it? Sanity expenses. That's what we talked about before. You got your sanity expenses, so you're getting your hair done, getting your nails done, getting your hair cut. My hair is like this because the barbershop is right over there in the bathroom, in the basement. And I'm spending $25 a week. My boys look exactly the same way. So I've got more sanity because I'm not spending all that. But that is definitely something that we have to all think about in our own habits and what we do, where we go. And a lot of times there's ways that we can not do one thing here and there, not go one place here and there, and save a lot more than we think. Yep. Great responses, y'all.
Yeah, and there's another question that someone asked about your views on cryptocurrency.
So that is one that has come up before. I refer back to my bankers in the branches in terms of, because I don't want to guide anybody one way or another. I'm not involved with the cryptocurrency, and you know, my role right here and my job is just help us think about, you know, what's coming into our home, what's leaving our home on a daily basis. And when it comes to the different currencies and so forth, then between the banker or the investment, generally an investment individual is one that talk about the crypto, break it down, pros, cons. You may want to do this, you may not want to do this, but I kind of pause on that one myself. We keeping it at just this level right here. Great questions, y'all. Great questions. Appreciate it. All right. Savings options at most financial institutions. You got your basic savings account. It's best for short-term or midterm goals. Health savings account. This is where funds are taken out of your check, and you know, you can use those for medical expenses. There's tax benefits associated with that. And then IRA is when it's taken out your check, saves. You can't touch it until retirement, but there's tax benefits associated with that as well. And I refer you to a CPA to talk about those types of tax benefits, but you can establish these at all the institutions as well. All right, building and repairing your credit. And I'm not gonna rush through it, but we've got a good portion of time to keep us on track. But this is, I know, $1 million topic right here. And so when we talk about credit, first there's a credit score. And I'm gonna pause with a story that I've been using, and I need to put it on paper because people are liking this story. It's the bicycle analogy. And when it comes to credit, it happened leaving church, and my 10-year-old asked, he was like, "Daddy, I need $1,000 credit card." This was Easter Sunday. I said, first of all, why y'all talking about credit cards at church on Easter? Where did this come from? And then I asked him, what do you know about credit? And he didn't know anything about it. And so in the car, literally, a bicycle analogy came out. So I told him, imagine that brand new bicycle that you have. And you just got it. Ryan up the street comes down. You don't know him, and he asked to borrow your bicycle. Well, the thought that's going to pop in your mind is, why do you need it? How long are you going to keep it? Are you going to let somebody else use it as well? Oh, and have you borrowed other folks' bicycles before? And how did you bring those back? That's kind of similar to how credit works. And when we were talking about this, I said, you heard that Ryan borrowed a bicycle from the neighbor across the street, but when he brought it back, it was damaged and somebody else brought it back. So your decision might be to, you know what? I'm going to let you borrow this bicycle, but I'm just going to let you ride it to the top of the street so I can keep my eye on you. Once you bring it back a couple times, then I'll let you take it around the rest of the neighborhood. Credit works a lot similar in that stance. You got credit scores, 670 and above, considered good. They brought the bicycle back on time. It was not damaged. 670 below, somebody else may have brought it back. It may have been late when they brought it back. It kind of shows the habits in regards to that. This is what banks utilize and go by, because when you walk in, unless you have a relationship with them, they don't know your habits. They don't know if you borrowed from several other institutions or banks. They don't know what's going on. So of course, there's a score that's put out there that kind of lets them know before they dig in and see where everything is, and that's on the credit report, and we'll get into that in just a moment. But this is why there's a score, because it's your financial profile of your habits with not just banking institutions, but rent, mortgage, cell phone, things where you've made payments. Think about when you go to a cell phone, what do? They pull your credit because they want to say, okay, how frequently are you going to be paying us back? And they pull that and they let you know. And I think that, also goes into the cost of what are you going to be paying a month, your rates and so forth. But credit scores, just like what I talked about, lenders use this information to determine whether to lend the money or not. When Ryan came to the door, my 10-year-old, he had the credit report already. He was looking at it. He was like, well, you didn't bring it back this time. And this time you had a flat tire. So I don't know if we're really going to be able to do anything in terms of me letting you ride this brand new bicycle that I got. Obtaining credit could be difficult if you've never had credit or had issues in the past. And that's the thing. If you've never had credit in the past, that's an opportunity for you to establish it on a good note. If they don't see anything, then they're going to say, okay, we don't see anything. They may talk about a secured credit card. That's where you take your own money, like $300, $400. You put it in a savings account at that institution. That institution is going to give you a credit card that's worth however much you put in that account. Because if you don't pay it back, well, they have their money already. But doing that, you spend a little, you pay it back. You spend a little, you pay it back. That's helping to boost the your own personal credit score. And as a college student, yeah, this is the time where you get a lot of offers in the mail, a lot of folks reaching out, and you want to be mindful of that, because while you may think it's just, oh, this is free money. No, it's not. That phrase doesn't even match. Free money, really? No, that phrase doesn't match, because you're gonna have to pay it back. You're gonna have to pay it back. So credit scores are important because they look at your payment history. That's how frequently, that's how often the bike has been returned on time. Length of the credit, that's how long you've kept the bike. New credit, that's how many times you've asked someone else to borrow their bike and you have their bike still. Types of credit used, maybe you borrowed a big wheel. Maybe you borrowed a small saw or something to use at the house, and you still have that. It shows what you borrowed, or you just asked for somebody for their car. No, and then amount owed. That's how many bikes that you have sitting at your house or at your place that you still have to give back to somebody else. So if Ryan shows up asking my 10-year-old for his bike, and he's got 5 bikes already at his house, why does he need that? And you owe all this, what's the probability that you're going to bring mine back on time? Well, think of credit the same way. If you've got credit cards out there, if you've got money that's owed, these are things that the bank is going to ask about. And when they get to your actual credit report, which is this right here, it's going to go through and break down how many bikes you have out there, how many big wheels you have out there. And they'll be able to look at this to say, okay, do I need to make this lend, or are there some things that we can work on? Because it's not a matter of just saying no or anything, but there's ways that you can rebuild and fix. And when you get your credit report, you want to make sure your names are appropriate. You can check this, freecreditreport.com, annual credit report, freeannualcreditreport.com. You want to check your credit report at least once a year, because if something's on there that's not yours, there's a number that you can call. It's on the credit report. Look on the right-hand side, Discover Financial Services, LLC. There's an 800 number there. If you see something on there, like I never had a card with them, call them. Say, hey, that's not me. They can fix that, because when you go to buy a car, when you go to buy a home, you want to make sure everything on there is you, not somebody else. And it also breaks down the amount of time that you paid on time, or if there are any amounts owed, this is where it's going to show up. If there's no missed payments, you see the couple thumbs up that are out there as well. That's what the lenders see. That's what the lenders see in that particular cycle. So important terms as far as your credit report. You got your personal profile. Make sure that your name is there. If you have, if you're married and your name has changed, it may show up on there as well, but you want to make sure that it's accurate. Credit summary. This is the amount of times that you have borrowed a bicycle in the past. You want to make sure that that's accurate. If there's some out there, or public records or inquiries or any balances that are out there, or if there's anything delinquent or in collections, that's where that's going to show up. So if there's a collections out there, it'll show up on the credit report, so that when you go to borrow some more, they're going to ask, okay, where are you with this? What are you doing to help to solve this particular point? Public records, that's if there's bankruptcy, then judgments, that's where that section, it will show up there. Ideally, this is what you want to be blank to maintain the good credit. And then inquiries. There's hard inquiries. If you go to buy a car, they're going to pull your credit. They're going to look at everything just like that. Soft inquiries may be something like when you go open a bank account. Banks use check systems. It doesn't hurt your credit in regards to that as a soft inquiry, but they'll pull check systems just to see your relationship with any other institutions that you may have. You want to open an account, but you owe another bank funds from a check that wasn't supposed to go through, or a check that went through that the funds weren't there. These are things you want to keep in mind in regards to that. And then account history. The bulk of the information as far as names, account types, balances, limits, loan amounts, and payment history. That is your blueprint. That's how many times you borrowed the bicycle in the past, you brought it back in the past, and just kind of shows a little bit of the behavior of what you're going to do with the bicycle. So to establish and rebuild, you can apply for a loan, open a credit card, or open an account with a cosigner if necessary. That's a credit card account. Now that the trust goes along with that. Opening with that cosigner, they're saying, okay, I trust you, but you better make sure that you're on time with your payments, because my credit is a part of this as well. You're using their good credit to help you build your credit. Also, to rebuild it, you can get a copy of your credit report. Fix any issues that you have out there. If you see something that's not you, call. You can email. It'll be all on that credit report. They don't give you the score when you do the free credit report, but at least you can see the activity and what's out there. And if something doesn't look right, you gotta check it. Apply for a loan with a cosigner, or a credit card with a cosigner. We're just talking about that. Opening a checking or savings account. We say that because that's going to show your activity. If you overdraw your account all the time, then how is it going to be when you apply for a credit card? Are you utilizing that credit for money and funds that we don't have right now? That's gonna be an indication of how you're budgeting in the purchases that you're making. Or a secured loan or a secured credit card, You put your own money down. That's the amount that's available to you. And you spend a little, you put a little back. If for some reason you can't pay it back, they already have their money. But after spending a little and paying back a little, at a certain point in time, I'll say, you know what? We don't need to have this savings account, these funds secured anymore. You can have those back, and you can just have the credit card, and we'll loan it to you. But to maintain your credit, don't use a credit repair company. Pick up the phone. That's it. Just pick up the phone. Credit repair companies, all they're doing is picking up the phone, but you got to pay them to do that. It takes a little work. And what they're doing is they're calling around. They may consolidate and so forth, but you're paying them for it. That's your money. You already owe somebody else. Don't pay somebody else to do that for you. Just pick up the phone. Don't miss or ignore payments, and close any existing credit accounts that you may have out there. Keep track of your credit lines. Use a budget. Save for larger purchases instead of using credit. That's your money. That is your money. Save for it. Because when you pay for it and it's yours, you own it already. You don't have to pay anybody back. And then review your credit report annually so you know what is on it. And then controlling your debt, make a list of them. Rank them from smallest to largest. Get ahead by making more than a minimum payment. Once you get out of debt, try not to get back into it. It's hard, it's tempting, but try not to get back into it. And we say that, so you got a credit card, $1,500. You got another one for $2,500. And you have a car loan that's out there. Well, you make that payment on that $1,500, make a little more than the minimum. And then once that is complete, roll that same payment into the next one in front of it. Don't take that as additional money in your pocket. Roll it into the next one and make an even larger payment for that $2,500. That's the snowball effect. And then once you pay that one off, do the exact same thing. It's already in your budget as far as what you're paying. Do the same thing for that car loan. Pay that car off. Pay that car off. That way, it's all yours and you're not paying somebody else for it. Increase financial security, life enjoyment. I think you all said a lot of this when I posed that question earlier. Reduce stress, improve credit score, own assets. These are all benefits of paying down your debt. It's something that credit is out there. We're constantly looking for more things to buy and ways to get it. And credit is going to be out there. So this is something to keep in mind in terms of what we do with our own lives. So resources to help. We got Money and Mindset. You can scan this QR code, articles, calculators, tools. You got to just try something. Try something on a regular basis. There's a financial personality quiz that's out there for you. Money and Mindset. It's a podcast that's offered to just talk about our own habits and ways that we can rethink our financial relationship. And then there's external resources, as far as coronavirus information that's out there in regards to that. CDC, USA.gov, and in small business administration relief programs, just like what I talked about, and I look forward to this link, Gloria. We will, we've got home ownership around the corner as far as this exact type of presentation, but business finance basics is one that we are also doing that looks exactly like this, but is focused around separating personal and business finances, cash flow analysis, merchant services, business insurance. So if you are a business owner, or if you are an organization that feels that this type of information will be beneficial to your organization, you can reach out to myself and we'd be happy to schedule this for you. You see, we're doing virtual right now, but I'm not afraid to travel. I like to see y'all in person. But without further ado, I think we've reached the conclusion, and I want to keep us very timely and link Gloria and everyone that's on the line. Just thank you for your attention on this Saturday morning. And any questions that you have, you can direct them via the email that I provided or through Link Gloria. But I'll turn it back over to you.
Oh, powerful information, Vincent. Thank you. Thank you. We cannot thank you enough. Wonderful information. And I love the way you included analogies that will make your information very easy to remember, like the bicycle analogy and so on. So wonderful suggestions. And we appreciate your offer to reach out individually with our participants. So thank you again. I see that our chapter president was able to log on. She was having difficulties earlier, and I'm not sure if some of the other participants might have encountered some difficulty as well. So Link Rosemary, if you want to share, you're on mute.
Yes. Good afternoon to everyone. Mr. McCain, please, thank you so much for sharing with us today. And I am so sorry I could not get on. I think I was one of the first ones to register, and I don't know exactly what happened. But as always, you have always presented us with some powerful information. And I am so grateful to you for sharing with us today. And I want to say thank you to all of our participants. And of course to you, Gloria and Mary, for getting our technology going and going so well.
Oh, well, you are quite welcome. We do have some gift cards that we want to give away. And Vincent, if I can share my screen.
Sure. Yep. You can take it back. There we go.
Okay.
Wonderful.
And again, thank you. We have some gift cards for our college students that are online. We actually have 3 gift cards, the $50 gift cards that are sponsored through our Aiken chapter of the Links. And we have 3 that are sponsored through the Aiken County branch of the NAACP. And of course, again, I want to say thank you to Donna Wesby and the Umoja Village and Shout Rate 94.7 radio. She's broadcasted there. We had several people that said when they registered, they heard this on the radio or they saw it on the Umoja Village website as well. But we do have those gift cards that I want to provide for our college students. And we have 4 gift cards that we want to give to our individual participant winners. Now, I want to say that with USC Aiken, I know that we had maybe 5 students that were registered, but I received an email early this morning from campus that said, and Melissa, you may want to speak to this. I think there was an outage with the internet service there, and if they were using the campus internet service, starting especially at 10 o'clock, they may have encountered some problems logging on. So we'll have to look back to see who was actually able to get on. As far as I know, I have that we have Nicole Ballard with Walden University. We have Ashard Hipes, I may be mispronouncing that, Hips with the University of Kentucky. And we have Jessica Brown with USC Aiken. And Tanisha Jones, I'm not sure which college. So Tanisha, can you tell us?
She's at USC Aiken, and Lauren Eubanks is also a student at USC Aiken.
Okay, Lauren Eubanks, okay. Thank you. So those students will be receiving the $50 gift cards. Is there another college student that's on? Is there another college student?
Did you mention Jessica Brown?
Yes, I did.
Okay.
Okay. And actually, I had their names. Let me stop sharing that and go back here. I was going to do a nice little wheel there. And it may not come up. That's actually the survey. I'll tell you all more information about that. We have a survey that we do want you all to complete. And so I'll be sending this through email. There are some questions. And of course, Vincent has mentioned that he's looking forward to your responses. So if you'll take just a few minutes between now and the end of next week to share your responses, your experiences regarding the webinar this morning. And so I am looking for, my wheel.
There.
All right, there it is. This was the one that included the college students, and I'm not sure. I've already mentioned the ones you had to be present to win. So I don't know if they had difficulty getting on, but there was Mary Nichols at Aiken Tech. Do you know if she's here? I'm just going to go with I think we've named 5 out of the 6. So I'm going to go with those unless there's another that you all are aware of that was online.
And Mary Nichols is not online.
Right, she is not. So that's why I'm saying. Well, then I'm going to go to our community participants. I have a wheel as well. Can you all see that one?
Yes.
All right. Well, we have 4 $25 gift cards that we want to share. And if you registered after, I'm thinking 8:30 this morning, you need to tell me your name, and you're online now. Is there anyone who registered after 8:30? Well, I'm going to go ahead and spin the wheel for our 4 $25 gift card participants, winners. Tiffany Palmer, is she online? Is Tiffany
Yes, I'm
Palmer?
here.
Wonderful. You want to tell us where you're joining us from?
Well, I'm not sure if I can win because I do work for Shout 94.7.
Well, I think we are going to say yes, you can.
Okay, great.
Thank you for joining us today and your help.
Yes, ma'am. Thank you.
All right. For our second winner.
Yay, that's my sister.
All right.
I knew you'd say that, Donna.
All right, I have Daniel Morris. I know Daniel is here because he's asked several questions.
Yay, Daniel.
Daniel, you want to tell us where you're joining us from?
Yes, I'm home here at Aiken, South Carolina.
Wonderful, wonderful. All right, that's our second. I have Lauren Eubanks. Is she online?
Yes, ma'am, I am.
All right, yay. Where are you joining us from, Lauren?
From the University of South Carolina, Aiken.
Wonderful. Well, now you are one of our college students then.
I am.
So your name should have been on that other list. In fact,
yeah,
I have you there.
I did.
So you'll receive a $50 gift card.
Oh.
So I'm going to close that one and we'll draw again for that particular one, okay?
All right.
So thank you. All right, Ahmed Michael, or Michael. Is he online?
I didn't see him on. He's with Umoja Village.
Okay, we said they do have to be present to win. I don't know, he might have had some problems getting on, so let's try it again. Looks like Kadisha Simmons. Kadisha Simmons?
I don't see her name in the chat in the participant list.
It's Khadijah Simpkins McClary.
Oh, Simpkins McClary. Okay. LaShonda Patterson. Oh, sorry, Lauren Eubanks, your name has come up again. Cassandra McManus. I think I saw her name on the list. She's been in several of our other webinars as well. So thank you for joining us this morning, Cassandra. Cassandra,
I am here.
you want to tell us where you're joining us from?
From the big town, 2 lights in South Carolina.
Okay. Wonderful.
Not far
Thank you.
from Aiken. Always good to support Gloria. Always good to support Gloria.
Oh, thank you. I appreciate it. Okay, Chantel Ibecomley. Is she online?
I don't see her in the participant list.
All right, let's go for another one. We have one more. Raina O'Brien. I thought I saw Raina earlier.
I'm here.
She's
Yeah, are you
all the way from
Tanzania?
Tanzania.
Yes,
ma'am.
I remember Raina.
I thought I remember seeing your name.
Rana.
Tanzania. Rana
Yes, ma'am.
O'Brien. Thank you. Thank you so much for calling in this morning and joining us. That's awesome. All right.
Thank you.
We have our 4 community participant winners, and we have our college student winners. Once again, I have for the college students, Nisha Jones, Laura Eubanks, Jessica Brown, Nicole Ballard, and Ashed, is it Hips or Hips?
It's Hips.
Hips. All right. Thank you. Did I miss any of the college students? And thank you to our community winners. Let me be sure. And Mary, I think you were going to help me with that to make sure I have Tiffany Palmer, Daniel Morris, Cassandra McManus, and Rana O'Brien. All right. Well, again, thank you all. I'll be sending the survey, and thank you, Vincent. We really appreciate your presentation this morning, and we will certainly stay in touch with you, and hope to have you back for future sessions if you can work us in your schedule again.
Oh, absolutely.
All right. And I want to say thank you to our technology support persons with our chapter and our chapter members who are online. Of course, they were not eligible for any of the gifts, but again, thank you all. It is a team effort, and we couldn't do it without the support of our community partners. So once again, thank you all. Enjoy the rest of your day and the rest of your weekend, and have a wonderful Thanksgiving. And don't forget, Vincent invited you all back next Saturday. Just kidding, Vincent. All right, you all take care. Any closing comments, Link Rosemary?
Thank you, Lake Gloria. I just want to say thank you. You have always done such a great job in getting this done. Much thanks to Lake Mary for her assistance, and to all the other Lakes and to you, Mr. Cain. Thank you for coming and sharing with us. To our community participants, thank you. Emoja Village, congratulations, Tiffany. And to all the other winners, congratulations. And I wish each of you a very thankful, blessed, and wonderful Thanksgiving holiday. Be blessed.
All right, thank you all. Enjoy the rest of your day and weekend. Any
Bye-bye.
other closing comments, Vincent?
No, I'm grateful for you all, and look forward to more to come. So stay tuned, everybody.
Great.
Right.
Thank you.
Thank you again.
Thank you, Gloria.
Gloria, we did want to get a picture.
That's right.
I think she's logged off.
I think we did want to do that, Mary. Can we do that?
Yes, if those that are still on, if you will turn on your camera, I have gotten some shots already, but they were mainly names.
Okay.
Look like people are signing off. But I'm gonna go ahead and do a screenshot.
Okay.
I'm gonna do it now. On the count of 3. 1, 2, 3. Thank you, everybody.
Thank you.
Thank you.
Happy holiday.